Welcome to Morning Call. I'm Latha, Venkatesh, and with me are Sonia, Shenoy and Anuj. Singhal. We all have a broad smile on our faces. This is about the best news you can get on a morning like this. Moody's upgrading the outlook on India's rating to positive. Well, we haven't got this kind of good news from the rating agencies in quite a while, and hence markets definitely going to be enthused. There are three stages actually: negative, neutral and positive. So now we have gone from neutral to positive. We had already come some way from negative to neutral. So this is really good news. We are about 2 notches away from junk bond status. We are well into the investment status, and now we can reasonably expect that we could get a rating upgrade sometime in the next several years. But to share this good news and give us more perspective on this, Dr. Arvind Subramanian, the Chief Economic Advisor to the Finance Ministry, joins in. Good morning, Dr. Subramanian. Thank you very much for joining us. Your first thoughts, the morning news from Moody's upgrading the outlook on India?
Yeah, I would say, broadly 3 things. First, I think this is validation of the broad direction and stance of, government policy over the last many months, including, the budget and so on. Second, it also confirms what we've been saying in the economic survey and the budget, that the outlook for the Indian economy is positive in terms of continuing macro stability and better growth prospects because of various factors, reforms, oil prices, monetary easing and so on. But I think given the way rating agencies work and what underlies the thing, the third very important point I think is that, and it's a point that we had pains to stress in the survey, and the finance minister also stressed in the budget, that this shows that the government strategy of pursuing public investment led and providing a stimulus to growth is consistent with our commitment, the government's commitment to maintaining, in particular, fiscal discipline and macroeconomic stability. Because always, the question was whether the fact that the fiscal target was not 3.6, and this was something that
actually,
very strong.
Dr. Subramanian, I'll just read out what the agency says. We still compare very poorly with our peers, and the Moody's statement says that this rating also reflects India's weaker performance relative to its peers on fiscal, inflation and infrastructure-related metrics. At 6% consolidated state and central deficits, we compare poorly with under 4% for other peer companies in the peer countries in the Baa3 rating. So would you say we are a distance away from rating upgrade?
Well, I don't want to, speculate on what will happen in the future, but I think the important point is that this is one more, validation of the overall stance of, macro and growth policies in India. Okay. And, what they're commenting on is more a level effect, but, the change, the fact is they're also signaling that we're moving in the right direction.
Dr. Subramanian, good morning. Just reading out from the release itself, according to Moody's, the ability of policymakers to strengthen India's credit profile to a level consistent with a rating will become apparent over the next 12 to 18 months. So it seems like in the next 12 to 18 months, if things get better, we could perhaps expect a ratings upgrade as well. In your own mind, what can we expect from the government's end in order to strengthen that credit profile?
Look, I think we've gone into great detail in the budget and in the survey on all that can and will be done and needs to be done. And remember, policies are going to be pursued because they're right and desirable, not necessarily or just because of their impact on investment ratings. But the overall stance of reform will continue, continuing commitment to macro stability and growth, and so broadly, that's the thrust, I think. Okay,
Dr. Subramanian, would we have a problem of plenty now with probably foreign investors chasing Indian bonds in particular and equities as well? Would you worry about a strengthening rupee?
Yeah, as we said in the survey, that there is always the problem for India going forward may well be surfeit rather than scarcity of foreign capital, and what you just said, that it could put upward pressure on the exchange rate. And that's a delicate balancing act that all successful emerging market economies have to contend with. So that's just life in the in the fast lane, as it were.
Okay. Well, actually.
Okay. I need to go, yeah?
All right. Thank you, Dr. Firman. Thank you for your first comments on the Moody's upgrade.
What is your own view, Latha, on how of course, there will be a move in the money markets today, but both money and equity markets?
Oh, yes, absolutely. I mean, no two ways about it, because this was not mentioned in the chatter at all. So this is fresh good news that has to be discounted by the markets. You must see the rupee opening closer to 62, probably even breach that level, and Reserve Bank will be buying dollars like no tomorrow. They're clearly unhappy with or uncomfortable with too much of inflows in too little a time. So they will try to smoothen that volatility. But not to throw cold water on this good news at all. There is going to be a stock market up move, and what you were worrying about, Anuj, all these days, that the Bank Nifty has not participated in the last 1 week, will be set right probably a little, because it would mean that money flows primarily into the bond market because of this news, and that will have its own concomitant impact on the Bank Nifty as well, besides the fact that the Bank Nifty will respond to the overall good news. But having said this, I don't want to take away from the good news. Let's just temper it a bit. One, Moody's has always been ahead of the other agencies. Standard & Poor has been more demanding in terms of the standards it requires before it mentions an upgrade. This is an upgrade of outlook. It is not an upgrade of rating. So let's not celebrate too much too soon. And thirdly, we must also remember that, when it comes to peer countries with Baa3 rating, we compare quite poorly in terms of fiscal deficit. They're all under sub 4%, and even public debt to GDP, they are around 40% and below. We are 60% plus. So we have some spaces to go before we get a rating upgrade. Let's be very clear of that. But today we will take the good news with both our hands. I think we have another guest joining us.
Yes, in fact, Anant Narayan of Standard Chartered also joins in to give us the impact. Jeffrey Dennis is also with us to tell us what the equity market should expect from this. Gentlemen, morning to both of you. Anant, I'm going to come to you first. What is the expectation as far as the money markets are concerned? Where do you see the rupee and the bond markets open this morning?
Morning, everybody. I guess it's a medium-term positive for all asset classes. While we can argue about whether immediate flows will come or not, the reality is investors, whether they're real investors or whether they are financial investors, do allocate limits to countries depending upon the rating. To that extent, their appetite to invest into India and India-related assets will go up. Likewise, a lot of corporate debt ratings are ceiling the country ratings. So particularly the better-rated corporates and banks and financial institutions will see a lot more of appetite coming in from global investors. To that extent, this is only a positive in the medium run. We will see flows coming into the country across asset classes, and that should be good news for the rupee, for money markets, and for fixed income markets. Immediate impact might be muted. The actual flows will take some time to come, but the sentiment will definitely be a positive. An outlook positive just means that we're going to go deeper into the investment grade space rather than risk a slippage into a junk status. So that's only going to give confidence to all investors.
Fair point, Anand. We'll come back to you in 1 minute. Please hold on. Let's get the equity view as well. Jeffrey Dennis of UBS is staying up late for us from the United States. Thank you very much for joining us, Jeff. What's your reaction? Moody's upgrading the outlook on the India rating to positive, though we still remain at Baa3 in terms of a rating.
I think, as your previous speaker said, this is very positive news. I do think for sure that the ratings agencies often end up ratifying what the market is thinking anyway. And as we know very well, there's been a lot of flows coming into India, particularly into the equity market, which is, of course, what I focus on. So I think you may well get some more flows coming in, but I think to a certain extent some sort of improvement in the ratings outlook is something we should be anticipating for India anyway, given what is going on in terms of the pickup in the growth story potentially, the drop in interest rates and inflation, and therefore the improvement in that side of the macro story. And of course, to an extent, the promise of what the structural reforms under Mr. Modi's government will generate for India down the road. So I would expect a positive reaction. I wouldn't expect this to lead to an explosive rally from here because the Indian market has done so well anyway. And of course, a lot of the international emerging market investors that I speak to are pretty overweight in India anyway.
All right, so that brings us to the next question then, Jeff, because, Moody's does mention that a higher rating will become apparent in the next 12 to 18 months itself. Do you think India is staring at a ratings upgrade within the next 1 year itself?
I mean, it certainly sounds that way. I don't particularly follow closely the procedures under which Moody's moves from an outlook to an upgrade, but clearly the trajectory in which the economy is on, policy is on, would mean, in my view, that if they have put India on positive watch, a positive outlook, a ratings upgrade seems natural to follow that. I mean, I think the things that I would watch as a sign of hopefully getting this upgrade, and who knows, further upgrades down the road, would be the success of the reform program in controlling the fiscal deficit, bringing the fiscal deficit down, and that's, I think, where the success of the implementation of the goods and services tax next year will be very important. And I think India's also got enormous benefit, I think, in the way people look at the markets from essentially the elimination of the current account deficit, and I think that is something the ratings agencies will also take a look at, because frankly, India's not so dependent on foreign capital flows anymore as it was a couple of years ago. So those are the sorts of things which will give you more upgrades down the road. But yeah, this is a very positive sign. India's definitely on the right trajectory.
Okay. Jeff, one more question to Anant, actually. Anant, where does the rupee open today? Would it, I mean, it's only 23 paise away from 62. So if the dollar got 24 paise cheaper, we are in 61 something. Also bonds. How many basis points do you think we could get because of this news?
As I said, Latha, the short-term moves can be muted. Let's remember that overnight the dollar actually strengthened post the FOMC minutes release. But I think we'll buck the international trend. We'll probably open, let's say, about 10 paisa stronger than yesterday in the 62.15 category. Look, RBI is going to be there to buy dollars, right? I don't think that strategy is going to change. So the market players will also be wary about that. This is more a medium-term kind of outlook on the rupee, which is positive, rather than an immediate, knee-jerk reaction.
What, only 2-3 basis points on bonds?
Likewise, exactly. In fact, I think after market hours yesterday, there were some rumors or actual comments coming in from officials about inflation being higher. So that will weigh on the mind of investors as well. So 2-3 basis points rally maybe to start with, but clearly in the medium term, there will be, if there are more flows coming in and if the appetite for global investors into India goes up, there will be more flows coming in, and that will pressure down yields and that will pressure down dollar rupee.
All right. Just one quick question to Jeff. Jeff, do you all really care for ratings when you all invest? I guess you all look for earnings, right?
Yeah, we certainly do look for earnings, but yes, we do care about ratings, because logically what ratings movements up and down do is they affect the cost of capital. They affect the volume of flows coming into or out of a country, which obviously would impact the currencies. That impacts the valuations that you would put on equities. The corporate earnings are the most important thing. But for example, just to broaden it out for a minute, as we all know, there's a lot of speculation that Brazil could lose its investment grade rating. Now, we don't think that'll be the case, but that's something the equity market in Brazil is worrying very much about. So these ratings agency decisions are very important for equities, even though you're absolutely right, the corporate earnings story is the most important thing. And of course, that's one of the good things about India. We see something like 15 to 16% corporate earnings growth this year in US dollars, and that's a good story by emerging market standards.
Just one final question then, Jeff. Along with changing the outlook to positive, they also talk about the concerns that we have with respect to the banking system, asset quality pressures, etc. And they do mention that the sovereign credit profile will remain constrained until there is no, improvement in the banking metrics. How are you approaching the banking pocket in the Indian markets, and how long, in your assessment, would it take for a recovery?
Certainly, I think the situation in the banking system is not the most positive thing that's going on in India right now. Although we're very impressed by and encouraged by the signs of reform that are within the state-owned banks, for example. So we think that's a positive aspect of it. I think what Moody's is doing is saying, this is not a carte blanche. It doesn't just mean the ratings will just keep on going up. There are challenges, and the performance of the banking system is one of them. Clearly, any deterioration of bank balance sheets, increase in past due loans, the need for increased reserving, that's the sort of thing that would make the rating agency a little bit nervous. But frankly, for me, I think the most important thing that will drive the ratings view down the road will be the evolution of the fiscal deficit. Does the fiscal deficit come down as the government's trying to achieve over the next year or 2 or 3 years? That's going to be, for me, the most important driver.
All right. Jeff Anand, thank you very much for joining us with your first thoughts on this news that just hit us an hour ago, that Moody has upgraded the outlook on India to positive. But the rating remains the same at Baa3, which is the lowest investment rating.